Shares of Tesla up 3% today. That means the market cap of the company $556 billion as it prepares to enter the S&P 500 on December 21st. Goldman Sachs is raising its rating on the company. That happened after the close yesterday. Mark Delaney is the analyst there. He raised his rating to buy from neutral. The price target is 780, which is the highest on Wall Street right now. And he basically said the shift toward battery electric vehicle adoption is accelerating, will occur faster than our prior view. What's also interesting is that he talked about not just the cars for Tesla, but the other stuff that Tesla does. I mean, we never talk about Solar City anymore, but it got wrapped back into Tesla. So it's interesting that he highlights that as a potential growth opportunity as well. Myles, you know, I don't know what Tesla could do wrong at this point that would dissuade people.
Yeah, it's funny you mentioned the note having comments on the other stuff that Tesla does. We're all old enough here to remember when the other stuff was the main thing to be excited about, and that wasn't as exciting a story. Now we're going back to they sell a lot of cars. I think it's interesting to see a projection out to 2040 from Goldman, 15 million cars a year by 2040. Sure. I mean, why not at this point? I think it's such an interesting story on a number of levels. And the level we're looking at Tesla on today is how do analysts make sense of a stock? They get a lot of questions on a stock that the street, some analysts have not been very right on the stock. Other analysts have been very right and are even more bulled up the higher the stock goes. But it's an emotional name, Brian Sozzi. Everyone has an opinion. Everyone has to have an opinion, it seems, on Tesla. And so I think to see a shop like Goldman come out and basically throw up the white flag on this thing at this point in time, right, as it's about to be included in the S&P. And as Julie said, I mean, consensus is what could go wrong, Sozzi, but that always kind of puts up your spidey sense, right? Maybe something will.
Well, Myles, listen, I know all the Tesla bulls out there on Twitter that love to tweet negative things to me. They're cheerleading this. They love this call. They see Tesla selling 20, 30, 40 million cars by 2050. And that's all fine and good. It's Goldman Sachs. They're going to cheerlead this. But can we just focus on the rating here? Neutral rating? Tesla has been, over 600% this year. And Myles, we've had these discussions in the past. As a stock analyst, you're paid big money, especially if you're working at Goldman Sachs, to make big calls or just get it right in some form. This analyst has clearly been out to lunch, which ultimately begs the question, can you put a lot of stock in what he's calling out now with regards to hitting 20 million potential vehicle sales for Tesla? I think this note happens to disregard some of the competition this company is going to see over the next 5, 10, 15, 20 years from very more established automakers, Ford, General Motors, you name it.
I mean, at the same time, when a company's price action, can at times be so divorced from fundamentals and is really more of a sentiment stock, to be fair, it's hard to predict how something like that is going to do. I mean, it's really that X factor that is difficult to analyze, kind of to Miles's point about trying to get your hands around a stock like this.